Thank you, and good morning, everybody. Appreciate you joining our interim results presentation call as a consequence of releasing our first half results earlier this morning. I'm hoping everybody's got access to the presentation that we published on our website, but also as part of this leader view call this morning. So I will run through the presentation, try to point to the highlights that I'd like to address, and then there's a chance for Q&A at the end of the presentation. So just starting off, if I can, to set the scene on slide 4, I think we can all sympathise with the challenges associated with the COVID-19 pandemic that has dominated much of this year. And as a consequence, the health and safety of our employees and protecting our business has been absolute priority. We've been very fortunate that our operations at Manaldi Bay have remained completely unaffected, with 0 cases of COVID-19 in our operational field. The main point for our results this morning that we are proud of is our interim dividend that we have declared for the first half, being $1.2 million. And this represents a 20% year-on-year increase from our first half of 2019 dividend. We launched our dividend policy with our first half results in 2019 with our maiden dividend of $1 million. And since then, we've been able to return $4.2 million to our shareholders since the launch of that policy. Again, very much evidenced by the stable and robust business that we have with our Manaldi Bay production. This production has generally been very stable, even against such difficult, challenging global times that we've seen. We are adjusting our guidance slightly this morning from 65 to 75 to 60 to 70 million cubic feet per day to really reflect some of that weakened industrial demand that we've seen as a result of COVID-19 and also some of the slightly unseasonably heavy wet season. But as you will have also seen, that industrial demand is now recovering, particularly in July and August, and we've been fortunate to see that that's back up to high levels as we saw production in August of 72 million. Just a reminder that we have a very limited work program for this year. We have no major capex required for the foreseeable future, and that really does allow us to have this strong balance sheet and enable us to commit and increase our dividend policy. And it's all these factors together really that has proved that we can withstand such a global economic shock that we've seen this year that nobody forecasted or that some of us have experienced before. And it really demonstrates just what a robust, stable, strong business we have and one from which we believe we can grow. If I just take you through, moving on to slide 5, as I mentioned, we do have this sustainable, robust business model, and we're fortunate that our operations have remained stable throughout this. Having fixed gas price contract is also, something that we are fortunate to have, particularly in commodity price volatility and some of the difficulties the sector particularly has seen over the last 6 months. And we have strong economic predictors for Tanzania, which really underpins our core business, but also allows us to see where that growth might come from. We are a Tanzania-focused domestic gas producer, and we've been fairly clear about that in our strategy about our commitment to Tanzania, which we'll talk a little bit more about later on. And really the reason behind that is because we see this growth, we see this access to power needing to be fulfilled, and we believe that natural gas will be a key part of that as a transitional fuel, but working against some of the lower carbon technologies, particularly hydro, which is a big contributor to energy in Tanzania. Particularly just focusing on the operational delivery piece here on slide 5, due to our results this morning. We have averaged 58 million cubic feet per day for the first half. Was slightly weaker than we expected for the reasons we've already discussed, but we are seeing that picking up. And that's a consequence of us slightly adjusting our guidance. We do have immediate line of sight on incremental demand increase in the near term from the Kinurasi 1 extension, but that is not factored into our guidance today. Financial strength really speaks for itself. We've talked about the increase in the interim dividend. It's pretty unique, I would suggest, in this environment, particularly when you look at also how much we've been able to return to shareholders since we implemented that policy. The rest of our results clearly are an improvement as we move forward with our business. We do have the limited work programme and the low cost of production. And our cash is building really as a consequence of those continued regular payments by TPDC. TPDC have been fully current now for many months, and that's continued throughout COVID-19, where possibly we've seen elsewhere in the world receivables not being as favourable as we're seeing in Tanzania. TANESCO are also committed to clearing some of their arrears. It's much less material to us, but still important that we do settle those outstanding payments, and those resumed in August, with them committed to settling all of the arrears in due course. So again, that's positive for us. Just moving on to slide 6, I think we really do just have to, again, focus on just how destructive and difficult it's been in light of the COVID-19 pandemic, and just how we've come through the worst of it fairly unscathed with our business. Tanzania, like every other government around the world, has had to take measures with how best to deal with their economy and their civilians and citizens in a world that we're living with this pandemic. Whilst there was no formal lockdown in Dar es Salaam or around Tanzania, there were some restrictions that have now been entirely lifted, with business returning to normal, and very much encouragement from the government to get back to pre-COVID-19 operating levels. And we're seeing this demonstrated through that rebound in demand that we talked about, evidence in July and August. As I mentioned before, very fortunate to have no COVID-19 cases at our field in Mnazi Bay, although there were very robust measures put in place, working very closely with Moral and Prom, our operator, to ensure that there were contingency plans in place should we see some infections. And again, that's been rolled out across all of our operations, not just in Mnazi Bay, but also in our offices in Dar es Salaam. So we have reopened our Wentworth office, as has Moral and Prom, and we have obviously social distancing measures in place to enable our employees to return safely. We did mention before in June that we partnered with the government to help provide PPE and medical supplies. This has been very well received by the government. Again, it's just another factor that shows how we work with the government as a partnership, and we very much see that we're aligned with them and can help them where we can in challenging times. So as a summary on COVID-19, we clearly can't ignore it, and we clearly have to take precautionary measures. But as far as we're concerned, we have a robust business that's carrying on as usual. Moving on to slide 7, I think it's really important to us that we have our dividend differentiator. We really want to underpin our fiscal discipline. It tells shareholders that this matters to us, and also absolutely evidences just how stable we think this business is and how we believe in Tanzania and our asset. Some of this I've covered before. We now are only one of 2 AIM-listed E&Ps committed to paying a dividend this year, and only one of 7 in the London market. And not only are we committed to this dividend, we're actually increasing it with a current yield of around 8%, which we think is pretty impressive. Going on to slide 8, the dividend is really only possible because of the performance of our key assets. And that really is, our asset continues to perform really well for us, and we see that through the stable production. It's consistent, it's reliable, And as we've mentioned before, we have the ability to increase up to 100 million cubic feet per day with no further capex. So at the moment, obviously, we are supplying 60 to 70% of our capable supply, and we do have line of sight on that increasing from the 60 to 70 level that I mentioned earlier through Kinurasi 1 extension. So there's real near-term opportunity to increase that production without any additional capex or any additional work required in the field, which is a very nice place to be. When we see demand coming through, we'll be able to increase to match that very easily. And we are seeing that increase despite the adjusted guidance range that we announced this morning. We can see since we started producing into the NNGI, the National Natural Gas Infrastructure Pipeline in 2015, you can see we really are increasing production and trying to keep that stable. And it's really that and the regular payments from TPDC that allow us to have such a strong business. And it's also driven by this forecasted economic growth that we see from Tanzania, and that's really the opportunity and why we're doing what we're doing. Move on to slide 9. Most of this speaks for itself. We have moved to profitability in this half of 2020 from the first half of 19. And we clearly have, as we mentioned this morning, an increase in our EBITDAX of $4.1 million versus $3.3 million in the comparative period. We still remain debt-free, which is a great place to be as well, having made our last debt repayment earlier this year. And cash is today just under $17 million. So we believe that the direction of travel on these key fundamentals and metrics are going in the right direction. And again, just to underpin our commitment to that dividend for shareholders. So what does this all mean going forward? We have demonstrated very much that this is a business that can withstand such a shock that we've seen, and where does the future growth come from? Given the strength of this business, where is the opportunity to find more and grow more? And really, just on slide 11, it's really about the Tanzania opportunity. We see long-term demand growth in Tanzania, and for us, that's absolutely the commitment and why we are operating in Tanzania. And this is clearly evidenced by the current access rate. It's pretty low, even though it has risen in the last 7 years. The commitment by the government to meet that universal target. And that commitment is not just words. You can see that commitment really evidenced by tangible investment in infrastructure. Not only do we have the new National Natural Gas Infrastructure Pipeline, which we started supplying into in 2015, but there's all the increased power generation complex at Kinurasi. There's the increase in grid and transmission expansion. There's a lot of infrastructure that's been committed and built to allow this energy access to increase. And you can also see the demographics for East Africa. Tanzania has only seen a marginal decline in predicted GDP as a result of COVID, from sort of 6.4 to 5.2. So there's clearly an opportunity for Tanzania to grow and become a stronger economy and a key part of the East Africa global development. On slide 12, we've seen this before. It's just a reminder that in order to increase that energy access and increase that energy supply, gas is a key part of that. Hydropower will continue to be a key part of the energy access solution too. But we strongly believe that natural gas, given all the infrastructure and given the gas that has been discovered, we believe that will also be a key contributor to that meeting that increased demand. Moving through to slide 13, this is really important to us to demonstrate that commitment to Tanzania, that clarity of strategy that we're trying to get across. Our gas to power platform, our gas to power supply that really is there to align with the government as a partner for delivering power to all. And we are a key contributor. We are one of only 2 suppliers into that NNGI, and we are currently supplying around 60 to 70% of gas that's flowing through that pipeline. So we clearly are a leading contributor in the domestic gas environment in Tanzania, and we have the opportunity with our track record and with our relationships and with our experience to develop and grow that further. We consider ourselves as a Tanzania business, and it's very important to us that we have a Tanzania workforce. We support and promote job creation and skills in Tanzania. We have most of our team in this business is based in Dar es Salaam. We have a very small team here to supplement that. So that is a key driver for us, and it's really key that we put back into the country. And that's also evidenced through our foundation and our work that we do with helping our local communities. And we do that through our own foundation, but also through the work we do on CSR with Moral and Prom. And we do contribute to the economic growth. It is a partnership. We have to be seen quite rightly to be working in partnership with the government. And whilst it's imperative for us to have a profitable business that can deliver returns for shareholders, it's also important that we can contribute and support the economic growth of Tanzania. So just to summarise on slide 14, very simple. Our 2020 ambitions haven't changed. It's important for us that we grow production to support that growing demand, and we've talked about the ways that we can do that very much in the near term with our existing capability, but also where some of the other opportunities may come from. We absolutely remain financially disciplined. It's a really key driver at the heart of our strategy that the dividend policy is maintained and increased where appropriate, as evidenced by today's declaration, and to deliver responsible growth. We do see, as I said, we do see ability to increase production, but we also look for opportunities to enhance that further in the right, responsible and sustainable way. So thank you very much for listening. I hope that we have got across strongly that this is a robust, stable business, and we're pleased with the results that we're able to publish this morning. The results that we're able to publish this morning.